Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Nubaru.
If you find our talks useful, please consider subscribe, like, and comment underneath because today we are stepping into a pretty wild scenario. I want you to imagine for a second that you are tasked with defending a critical military base, right?
Okay, high stakes.
Exactly. So an enemy drone is incoming. You fire the state-of-the-art, multi-million-dollar military infrared laser directly at it, and the energy just, well, it basically just bounces off.
Yeah, solely ineffective.
Right. It acts almost completely like a mirror, reflecting the beam away while the drone just keeps flying right at you. I mean, that is the billion-dollar problem currently terrifying the defense industry.
It really is.
And today we're looking at a company claiming they have the actual solution. So just to set the stage, this is the absolute definition of a high beta turnaround play. And for anyone listening who, isn't deep into financial jargon, when we say high beta, we mean the stock isn't just going to drift quietly.
Oh, definitely not.
Right. It is highly volatile. It swings violently up or down based on pretty much every single headline or even just a breeze in the market.
Yeah, and it really is a fascinating, almost binary setup for you as an investor. You have this extreme tug of war happening behind the scenes right now. So pulling on one side, there is this incredibly bullish insider accumulation. I mean, people at the very top putting their own money on the line.
Which you love to see.
Exactly. But pulling hard in the exact opposite direction is a deeply terrifying balance sheet. So our mission today is to unpack that tension. We really want to give you the full wealth-building context of what a microcap turnaround actually looks like under the hood. Specifically when a company is pivoting from legacy industrial manufacturing into a dual-use defense and security platform.
Right. So before we look at the financial tug of war, I feel like I need to understand what they're actually selling because clearly if they're pivoting into defense, the Pentagon sees something here. I'm looking at their proprietary technology. It's a high-power 450 nanometer blue laser architecture. But I have to admit, I'm a little confused right out of the gate. If infrared lasers are the industry standard for the military right now, why is a blue light laser suddenly like the holy grail for taking down drones?
Well, it all comes down to the physics of how light wavelengths interact with metal, specifically copper and copper alloys.
Okay, copper.
Yeah, because copper is essentially the nervous system of virtually every modern machine on the battlefield. Yeah. I mean, it's in the drone motors, the vehicle wiring, the communications equipment, all of it.
Oh, wow, right. That makes sense.
Right, and for decades, like you mentioned, the military relied on infrared lasers. But infrared light has a very long wavelength. So when that long wavelength hits copper, the physical properties of the metal cause it to reflect a massive percentage of that energy.
It just bounces off.
Exactly. The copper literally acts like a mirror, deflecting the heat rather than actually absorbing it.
I mean, that sounds like a fatal design flaw if your entire goal is to melt the internal circuitry of an incoming threat.
It's a massive inefficiency, yeah. But when you shift the wavelength down to 450 nanometers, which is in the blue spectrum of visible light, you completely change the math.
How so?
Well, blue light has a much shorter, higher frequency wavelength. At that specific frequency, the absorption rate in copper is vastly superior. So instead of reflecting the energy away, the copper absorbs it immediately. It melts and degrades the metal exponentially faster than an infrared beam ever could.
Okay, I think I get it. It's almost like trying to cut a thick piece of rope with a butter knife versus a scalpel. Like both are metal blades, sure, but the scalpel's edge, which is a specific wavelength here, is designed to penetrate immediately.
That is a great way to visualize it.
So your time to kill on a target is drastically reduced, which gives you incredibly high precision for directed energy weapons.
Yeah, exactly. But, having the best laser scalpel doesn't automatically make you a cleared defense contractor.
The military doesn't just buy parts on Amazon.
Exactly.
Yeah.
The military doesn't just buy a raw laser component and say, figure out how to use it. They buy entire integrated systems. And this is where Nubaru is trying to build a very intentional structural moat. They aren't just selling naked lasers. They've been aggressively assembling a vertically integrated ecosystem around that blue laser.
Okay, I did see they acquired a controlling stake in a company called Orbit, which brings in AI-driven operational resilience software. But hold on, I'm losing the thread a bit here. How does artificial intelligence software actually help a laser beam hit a drone?
Think about the environment where these weapons actually operate. You're trying to hit a fast-moving target miles away through dust, rain, fog, maybe atmospheric turbulence.
Right, it's not a controlled laboratory.
Exactly. The Orbit AI software acts as the brain of the operation. So it constantly calculates target acquisition, adjusts for atmospheric distortion, and ensures the hardware remains locked on and resilient to any countermeasures.
Oh, wow.
Right. So now you aren't just selling a laser, you're selling a smart weapon that actively aims and corrects itself.
That makes total sense. And then they formed a joint venture with Maddox Defense, right? And they provide ITAR-compliant United States manufacturing. Now, I know ITAR stands for International Traffic and Arms Regulations, but, and maybe this is a basic question, how big of a deal is that compliance, really?
Oh, it is the golden ticket.
Really?
Absolutely.
Yeah.
If you want to manufacture advanced weaponry for the United States military or its NATO allies, you absolutely must be ITAR compliant. Gaining that certification organically can take a company years of brutal bureaucratic red tape. We're talking audits, complete facility overhauls.
A nightmare, basically.
Right. By partnering with Maddox Defense, they entirely bypass that waiting room.
So they're offering a complete ready-to-go package then. Like they have the directed energy hardware, they have the Orbit AI software to aim it, and the Maddox manufacturing base cleared to build it.
Yes, exactly.
So if you are a NATO defense client and you integrate this hardware-software combination into your defense infrastructure, it creates a massive switching cost, doesn't it?
Oh, the switching costs are monumental. Because once your soldiers are trained on the Orbit software interface and your supply chains are tied into Maddox's manufacturing, it is incredibly painful and expensive to rip all that out and switch to a competitor.
You're just logged in.
Right. You become deeply embedded in the supply chain.
Which is a brilliant structural moat. I mean, it's the kind of narrative that gets investors incredibly excited.
Yeah.
But here is where I have to step in and, look at the actual books. Because a great narrative doesn't matter if you can't translate it into cold, hard cash flow.
Very true.
So what does the revenue engine actually look like right now?
Well, the recent corporate update from the end of March 2026 shows some tangible initial traction. The company reported a combined commercial pipeline exceeding $6 million.
Okay, $6 million.
Right. And within that pipeline, they have about $280,000 in directed energy billings and another $500,000 in executed orders.
And the centerpiece of all this seems to be a major defense program in Ukraine. So that program has officially been activated, and the Phase 1 revenue projection is sitting between $5.75 million and $11.5 million.
Right. That's a significant chunk.
Yeah. And we are also seeing the Orbit software vertical generate about $80,000 in year-to-date billings with a $3.9 million pipeline. Plus, that Maddox Defense joint venture is aggressively targeting $100 million in annual revenue by 2028.
Yeah. So when you lay the numbers out like that, it paints a picture of a company rapidly scaling its new verticals.
I am going to push back pretty hard on that, though, because as an investor, you need to be very clear about the difference between a pipeline and recognized GAAP revenue. I mean, anyone can have a pipeline.
That is fair.
A pipeline just means you have a list of potential clients who are interested. But when I look at the actual bottom line, their Q4 earnings per share was negative 32 cents, and management is guiding toward achieving a positive shareholders' equity balance by Q2 2026.
Ambitious.
Very. How on earth can they realistically hit that goal when government defense procurement is notoriously, agonizingly slow?
You are hitting on the multi-million-dollar question right there. In the defense sector, the gap between a successful prototype demonstration and a recognized revenue contract is historically referred to as the Valley of Death.
The Valley of Death. That sounds pleasant.
All right. It is a graveyard for innovative startups. The government moves at its own sluggish pace. They have to allocate budgets, run trials, pass congressional reviews. It takes forever.
So the pipeline doesn't mean much until the check clears.
Exactly. Billings and executed orders are a solid start, sure, but until that cash clears the bank and hits the balance sheet, it doesn't pay the salaries of the engineers. So management's target implies they are betting heavily that the Ukraine Phase 1 money will convert from a pipeline figure to recognized GAAP revenue incredibly fast.
Okay, so they have the best tech, they have millions in the pipeline, but the cash just hasn't fully arrived yet. So I'm looking at their market cap right now, and I'm scratching my head. Why are they trading for pennies? We really have to look at the danger zone here.
We do. And the danger zone is the balance sheet. It is the anchor weighing down this entire lightsaber narrative. Nubaru has officially received a going concern qualification from its auditor.
Okay, for the listener who might not read financial filings every day, What does a going concern warning actually mean in practical terms?
It is basically an auditor throwing a massive red flag to the public markets. Legally, it means the accounting firm has run the numbers and concluded, look, we have serious, quantifiable doubts that this company has enough cash on hand to survive the next 12 months of operations.
Yikes. And that triggers a domino effect, right? Because of that warning, they've also received a noncompliance notice from the New York Stock Exchange for failing to maintain $2 million in stockholders' equity.
Yeah, they are quite literally fighting for their survival on the public markets.
But wait, how does a company with an auditor's warning actually get a defense prime to trust them with a long-term contract? Don't military clients look at the balance sheet?
They absolutely do, which is exactly why the company is desperate to bridge this financial gap. When a company is fighting for survival just to fund a $6 million pipeline, they often have no choice but to resort to what the market calls toxic financing.
Right.
Nubaru recently had to take a $500,000 loan from Agile Capital, which is actually secured by their own cash. And worse, they issued convertible notes to Diagonal Lending and Boot Capital, totaling roughly $282,000 in initial capital.
I really want to talk about those convertible notes because they are incredibly dangerous. I always hear people call this the death spiral. Let's break down how this works. I picture it kind of like a treadmill.
Okay, a treadmill.
Yeah, imagine the company is running on a treadmill to keep its stock price up. But they need cash, so they take these convertible loans. The lenders say, we will give you cash today, but we get to convert this debt into new shares of your stock later, usually at a massive discount to whatever the market price is.
That is exactly the mechanism, yes.
So if the stock price drops, the company is forced to print and issue more and more shares just to pay back the exact same dollar amount of debt. It's like the treadmill suddenly speeds up.
Right, they have to run faster.
And the faster it goes, the more shares they print, which dilutes the pool, which drives the stock price down even further, which forces them to print even more shares. Eventually, the machine forces the company to print shares so fast that the original shareholders just fly right off the back of the treadmill holding pennies.
The treadmill analogy is spot on because it inherently suppresses the stock price. The broader market knows new shares are constantly waiting to be printed and dumped. But the biggest overhang for Nubaru isn't even those initial notes.
It gets worse.
Oh, yeah. The true anvil hanging over the market right now is a newly filed prospectus for the resale of up to 60 million shares by an entity called YATIPN.
60 million shares. I mean, for a microcap company, that is a staggering amount of potential dilution. It creates a massive psychological barrier for both retail and institutional investors.
Huge barrier.
Because if you are sitting at your computer thinking about buying the stock today, you know that 60 million shares could just flood the market tomorrow and completely crush your position. Like slicing a pizza into smaller and smaller pieces just to afford the cheese.
Exactly. It acts as a permanent ceiling on the stock price. Every time the stock tries to rally on good news, that massive wall of potential selling pressure is just waiting to absorb all the upward momentum.
But this is where the story completely contradicts itself. If we have a death spiral treadmill, an auditor screaming going concern, and a 60 million share wall of dilution hanging over the market, this stock should be dead in the water.
It should be a flat line.
Right, a total flat line. But if we look at the charts, the exact opposite is happening. What is going on with the trading volume?
It's wild. The recent technical action has been incredibly violent. We are seeing structural breakouts where the stock is surging 22% to 31% in single trading sessions.
Wow.
Yeah, and the stock has decisively breached its 20-day high resistance levels, pushing past that 22 to 60 cent range, and it's actively challenging the 50-day moving average. But honestly, the price action isn't even the most surprising part. It's the volume.
What are the numbers?
We've seen trading sessions where the volume was roughly 4 to over 7 times higher than the 20-day average. We are talking about 110 million to 279 million shares exchanging hands in a single day.
Stop right there. What actually causes a 279 million share day when there is literally no fundamental press release acting as a catalyst? Is that just retail traders hiking it up on message boards?
It's not a chance. Retail traders alone cannot generate 250 million shares in volume on a microcap stock. That magnitude of participation indicates algorithmic momentum ignition and aggressive short covering.
Okay, so the shorts are getting squeezed.
Exactly. When short sellers who bet against the stock hoping the balance sheet would crush it start seeing the price tick up, they panic. They're forced to buy shares to cover their losing bets, and this triggers institutional algorithms designed to detect volume spikes. So they buy in automatically, which just creates a massive snowball effect.
I also noticed the RSI, the Relative Strength Index. Wait, before I throw that term out there, what does the RSI actually measure for you when you are looking at a chart like this?
Well, the relative strength index is basically a momentum oscillator. It measures the speed and change of price movements on a scale from 0 to 100. Generally, an RSI above 70 indicates a stock is overbought. And in this case, the RSI pushed way up into the 73 to 77 range.
Okay, so it's basically telling us that the stock is running so hot and so fast that the rubber is melting on the tires. It's highly prone to a sharp pullback or consolidation just to cool off.
Yeah.
But even with that overbought warning, the momentum is undeniable. And I think that momentum is supported by what has to be the most fascinating part of this entire discussion, the insider buying.
Oh, it is the single most bullish pillar of the narrative right now. CEO Alessandro Zamboni didn't just go on a PR tour talking about the pipeline. He actually took $1.4 million of his own convertible notes and converted them into over 4.3 million shares of the company.
And the crucial detail there is the psychology of the price. He converted those notes at an average price of roughly 34.5 cents per share. The stock had recently hit a 52-week low of 15 cents.
Think about that.
Right. The CEO is stepping in and effectively locking in his capital at a premium 34.5 cents while his own auditor is actively screaming danger.
It is the ultimate skin-in-the-game maneuver. It signals to the broader market that management firmly believes the turnaround is real. And he isn't the only one accumulating shares either. We saw UBS Group grow its institutional stake by over 10,000%, and Geode Capital Management essentially doubled its position.
So are they just looking at the math and wagering that the cash flow from the Ukraine program and the Maddox joint venture will hit the books fast enough to outrun the treadmill? Like, are they betting the revenue beats the dilution death spiral?
That is precisely the bet. They believe the valley of death has been crossed. And there are also some heavy speculative rumors adding fuel to the institutional buying.
M&A rumors, right?
Exactly. The defense sector right now is ripe for mergers and acquisitions. You have Nubaru sitting on proprietary, highly effective blue laser IP, and they are now deeply integrated into the NATO supply chain with ITAR compliance. It is really not hard to imagine a much larger defense prime simply buying them outright just to absorb the technology and that Orbit AI software.
Especially when you factor in the undisclosed Tier 1 defense partner they have in the Asia-Pacific region. I always find it fascinating when a company drops the phrase Tier 1 partner but utterly refuses to name them.
Oh, it drives the market crazy.
Right, the market's imagination immediately runs wild trying to guess which allied military force it is. A high-profile contract reveal there could instantly rewrite the valuation model overnight.
Absolutely.
So if we pull all of this together into a final investment thesis for you, the listener, where does Nubaru actually stand today?
Fundamentally, this setup scores a 6 out of 10 on the bullish scale. It represents incredibly high speculative risk because that balance sheet is still a total minefield. But it offers massive asymmetric upside if the turnaround succeeds. It is not a buy and hold forever retirement stock right now. It is a 3 to 6 month swing trade.
And for that 3 to 6 month horizon, what is the exact catalyst calendar the listener needs to watch?
First and foremost, Q1 earnings, which should be hitting late May or early June. You are looking for one specific thing here: pipeline conversion.
Did the billings turn into GAAP revenue?
Exactly. We need to see the cash. Secondly, watch for the official closing of their 51% stake in Tecne. That's an Italian defense mobility and electronic warfare company. That acquisition is expected to add direct revenue contributions immediately upon closing.
And finally, you have to keep an eye on the macro tailwinds. The NATO UAV defense market, basically the counter-drone space, is currently estimated to be worth $7 billion to $10 billion annually. The budgets are clearly there, the geopolitical tension is there, and the market is practically begging for non-kinetic, directed energy solutions. Because firing expensive missiles at cheap drones is just economically unsustainable.
The demand side of the equation is undeniably solved. The only question left is execution.
Which leaves us with a fascinating, somewhat harsh reality to ponder as we wrap up today. As you watch Nubaru navigate this transition over the next few months, you really have to ask yourself a fundamental question about the modern defense tech industry. Does the best, most innovative technology actually win the wars of tomorrow? Or does victory simply go to the company that can survive the brutal, grinding financial treadmill of military procurement cycles long enough to finally see the battlefield?